Lauren.
And Michelle.
And we are the Weber Center Real Estate Group. And we've been sharing some knowledge about the purchase contract, the whole buying experience. And up until this point, we talked about, entering escrow, contingencies, all that. So if you haven't seen those, go back, watch them, and you can be brought up to speed with what we're going to talk about today, which is
the loan contingency. So it's the last and final contingency, probably the most important one because what it means for releasing it. But today we have some very exciting news.
We have a special guest, Vince Tomich.
Yay!
We have done a ton of deals with him. He is our preferred lender. He's with Cross Country Mortgage, and he's going to jump on and share a little bit about why the lender does all the things that they do, why they ask for so many documents, and then we're going to dive a little bit into the process.
Yeah. So take it away, Vince.
Hi, everyone. Thank you, Lauren and Michelle, for the introduction. As you guys mentioned, my name is Vince Tomich, and I'm with Cross Country Mortgage. And today I wanted to talk to you guys a little bit about the loan process, as well as some frequently asked questions. A very common question that I get is, why do you request so many documents through this process? And there's basically two reasons for that. Number one is we like to make sure that you as the borrower have the ability to repay the loan once we close it. Number two is we like to take a proactive approach when putting your loan together. And what I mean by that is we like to look through everything that you've submitted and identify any problems that may come about in the pre-approval process, rather than waiting until you've worked so hard with your agents to find a property, get into escrow, and then have an underwriter call out the problem. The underwriter is the person that ultimately makes the decision on whether it's approved or denied, so we want to make sure we have everything buttoned up before we send the loan to them.
Thanks so much for sharing that with us, Vince.
So as you can tell, the lender and the bank is taking a thorough look at you as a borrower. And up until this point, we've talked about all the other contingencies, and this brings us to the loan contingency, which is typically 21 days. We've seen it shortened to maybe sometimes even 17 or 15 days. And day one is gonna start just like all the other ones, the day we open escrow. So while you're doing your inspections and everything else, you're gonna also be doing the loan process with Vince if you're working with him.
So it is very important, no matter what lender that you're working with, that if that lender or if Vince asks you for something as the buyer, that you get him whatever that documentation is as quickly as possible. That way that they can move your loan review on to the next step. So now Vince is going to go through a little more in-depth explanation of how that works.
Yes, so as Michelle and Lauren mentioned, it's important to submit all of your documentation as quickly as possible to move your loan to the next milestone. Step one would be initial disclosures. So initial disclosures are the basics of your loan. That details the property address, the sales price, the loan amount, the interest rate, the closing costs, how much money you're going to need to bring at closing. So once those have been signed, we can now move to step two, which would be ordering the appraisal. The appraisal is different than your home inspection, as the appraisal is a third-party inspection that verifies the home meets safety standards, as well as that the value matches the contract price that you're in. Once the appraisal's been ordered, we usually are able to then send your loan to the underwriter for conditional approval. So to reiterate, the underwriter is basically the person that we are gearing all of this documentation for. So they make sure that your loan meets all of the guidelines that are necessary to approve the loan. Once the underwriter has reviewed the guidelines and reviewed what we sent in, they would typically issue a conditional approval, which means that your loan will be able to have final approval once we meet the following conditions. Those conditions usually consist of minor items like obtaining insurance, getting updated pay stubs or updated bank statements. So our step four would be to gather those items that are on the conditional approval list and resubmit the loan to the underwriter for final approval, or also known as clear to close.
So it's time to remove that loan contingency.
Yay!
Ta-da! So obviously the goal is to have that final approval from your lender, that stamp off, so that you can move on forward. And tell us, Lauren, why that is so important.
It's really important because, like we said, it is the last and final one, which means you are fully committing as the buyer to the seller that you are definitely, absolutely going to purchase this house.
You're gonna
And
do it.
if for whatever reason, and this has, knock on wood, never happened to any of our clients, it doesn't go through because of the buyer's reasoning or responsibility, then the seller is entitled to taking up to 3% of the purchase price, which typically is the full earnest money deposit that you put in on day 1 or day 3.
Yes.
So
It's very important that you are committed and ready to buy that house. Once you remove it, then we go into the closing phase. So Vince is gonna hop back on here and he is gonna tell us what happens towards the end of the loan process. We are gonna make another video to wrap it all together with escrow and all of our other friends that make buying your home possible. And then it's time to celebrate because you are a new homeowner or you just sold your home.
yay! So Vince, take it away again.
Yes, so the last step to the loan process is closing. So the closing process starts with you signing your final loan docs. Final loan docs are going to look very similar to your initial disclosures, although some of the numbers and fees may have adjusted along the way. You're going to be signing those final loan docs with either escrow or a mobile notary that can either go to your home or place of work, wherever is convenient for you. Once your loan docs have been signed, the next step would be for you to wire your funds. So at the end, there's going to be an outstanding balance that you need to submit to escrow, and that's going to be the remainder of the money that you owe to complete the purchase. Once escrow has confirmed that they have received your wire, then they would notify us as the lender, to which we will now give them the complete loan amount, and then they are able to disperse that money to the seller. Once that money has been dispersed, they're able to record you as the new owner of the home, and that would complete the closing process for you.
Vince, thank you so much for sharing all that information with us. You guys, Vince does an amazing job. A lot of our clients have had amazing experiences with him. He's on top of things, he's on time, and he delivers. So if you need any lending help, give him a call. He's awesome.
He also does refinancing, so
yeah, he does,
he's your guy. So thank you everyone for watching. If you need anything, if you have any questions, feel free to reach out to me, Michelle, or Vince. We're always here for you. And of course, if you are looking to buy or sell or know anybody looking to buy or sell, we would absolutely love to have the privilege of serving you and your friends and family. So hope you're having a great day. Tune in next time to learn about the closing process. Bye.
Bye.